Hey everyone, Coach Investor back with another late night SoFi video for today. Unfortunately, I'm sorry if you got clickbaited into this video. That's just the way YouTube works nowadays, but I'll give you all the info you need in this video, so don't worry about that. Now let's start with the good news. The good news is that we have another firm that is covering SoFi. Citi has started coverage of SoFi and has put it as a buy, saying that the stock will make its way back up to $20. Now that's great, because a couple of quarters back, not enough people were covering SoFi. Anthony Noto said that as well on a call, I believe, said there were like 3 analysts or something like that. So the estimates weren't really much to go by. Right now, I believe we're at 8 to 9 analysts covering the company, which is much better. And if we go by TipRank's estimates, the majority of them have a buy rating. And right now the average price target is around $25, representing a 66% upside. So not too bad. But I'm not here to talk about that. I'm here to talk about the bad news. The news that came out, and unfortunately, the Biden administration has decided to extend the Student Loans Act again, all the way to May. It was expected to end at the end of January. Now it got extended again until May. So the Biden administration on Wednesday extended a student loan moratorium that has allowed millions of Americans to put off debt payments during the pandemic. Under the action, payments on federal student loans will remain paused through May 1st. Interest rates will remain 0% during that period, and debt collection efforts will be suspended. Those measures have been in place since early in the pandemic, but were set to expire January 31st. Joe Biden said that we know that millions of student loans borrowers are still coping with the impacts of the pandemic and need some more time before resuming payments. Well, I don't know if giving away free money all the time helps with that, but hey, here is that. And I'll end with this little thing here. The policy applies to more than 36 million Americans who have student loans that are held by the federal government. Their collective debt totals more than $1.37 trillion. Incredible. So unfortunately for SoFi, their expectations need to be pushed back another 5 months. But if we look back at the last quarterly earnings we had, we can see something very interesting there. Again, something that I have covered on this channel before, but just a friendly reminder. The company has raised its guidance already for 2021. In fact, the company sees adjusted net revenue exceeding $1 billion for the very first time, with a 61 to 63% growth anticipated over 2020. And 2020 was already a great year for the company, so growing at that 62% at the midpoint is quite an achievement. And as mentioned, this is despite facing previously discussed headwinds estimated to be around $52 million of negative impact from the CARES Act extension on our SLR volumes and our prior equity investment in Apex being called earlier this year. So for next quarter, nothing really changes that much. For next year, yes, the company might need to maybe readjust their estimates themselves, readjust their expectations for the year, because the first 5 months will be again without that student loan repayment. So something to consider there, but this is just a short-term struggle, not a long-term one. And for those that do not know, lending is still the biggest chunk of their business. But if they do get the bank charter, because yes, I will mention the bank charter again, because this is still something we're waiting on, but if they do get it, it's going to improve the business significantly. I've talked about that in the past. All videos will be in the top right corner. But if you remember back in the presentation, they showed us exactly this. It will drastically reduce the cost of funds and immediately boost margins. They're talking about a possible $1 billion in profit margins in the next few years, which really isn't a small number. So yes, I do hope they get their bank charter sooner rather than later. If they do not get it, it will be an issue. But if they do get it, great, upside will be immense here. Now, before we finish this video, let's quickly look at the graph. All right, so quick summary, since we went to visit that $24 resistance, we went all the way back down to $14 that has held as support. This is not a dip, by the way, this is a crash. A dip is 5%, 10%. close to 40% can already be called a crash. So everybody that's saying buy the dip, this isn't a dip. But anyways, moving along, we can see here that it's no longer oversold. The MFI has seen a good upside here, so that's great. RSI is a bit stable, good as well. Couple of green days, one after the other, is great to see. If you're averaging up, dollar cost averaging might be a very, very good period to start doing that. So that will be it for this video. Again, for long-term investors in SoFi, nothing to be worried as of now. If there won't be a bank charter, I will let you know as soon as possible. But as of now, nothing really changes. Yes, for next year, the company will have to revisit their estimates for the first 5 months and how that will impact the full year. But other than that, SoFi is still a great company right now with the price. Risk reward here is pretty good. So there is that. Again, tomorrow, probably the last video before Christmas. If you liked this video, consider leaving a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.